Yeah, and there are some ways that people can get their rates down, like buying points and different things like that. But one of the best ways to get your rates down is your credit score
Yeah.
and making sure you have that optimal credit score. So you just did a class recently on credit scores. So can you give us like a quick rundown of what buyers can do to really optimize their credit score when they're getting ready to buy a house?
Yes, so it's true. The credit score is one of the main factors that increases or lowers your interest rate, right? So that's why this average rate, that's for taking in consideration higher credit score, and some people have lower score, and that's gonna negatively affect the rate. So here,
Gotcha.
just in general, what we have a little chart. Or whatever you call it, with what rates could be. So they could range from 300. I've never seen in my 22 years career. I think the lowest I saw is 420 and up to
Wow.
850. And, also hard to get there. It's hard to get that low and it's hard to get that high up. But honestly, once you're at 780 plus, score bracket, you're gonna get the best interest rate. If there is a mortgage insurance, you're gonna get the lowest premium on that as well. So
Okay.
780 and above is a sweet spot. Um, 740 to 780 is actually a very good rate scores, and most people, actually a lot of people fall into that category. So that is your target, that's where you want to be. So what actually affects the credit score? 35% effect is your payment history. Obviously, we want to see how you
Mhm.
making your payments, how you handling your debt, paying it on time, you have collections, bankruptcies. Those will definitely have a negative effect on your score. So even if you were late on your credit card that has $2 balance on it, that is gonna have a huge 35% impact on your credit score. Another one is very important is the amount you owe on your credit cards. Um, we call it debt utilization ratio. So basically, we look at the percentage of what your balance is comparing to your limit. Are you maxing out on your
Mhm.
credit card or not? So the best is to be at 6 to 10% of the limit.
Oh, wow.
And somebody will say that, well, I use my credit card for points, maybe, right? And then I pay it off
Mhm.
at the end of the month. So I carry zero balance. So, little trick, if you wait until the day when the payment is due, the credit card
Mhm.
company will actually report the balance that you had. But so there is a billing cycle that ends before the payment is due. So you need to know when the credit card reports to the bureau. And you can call them and say, when do you report to the bureau? And make sure that you pay before they report, not at your due date, but before they report. And then they will report zero balance. And obviously, that's going to help to increase your credit score. And when I
Wow.
look at
Okay.
clients' credits, and I see that there is potential for them to increase the score because of that debt utilization ratio, and I just recommend them just pay it off or pay it down. Sometimes actually paying it down better than paying it off. And I can run that simulator for them and tell them what they need to do. And it actually improved the score drastically. It's easy to do, unless of course you're not able to pay down to 6 to 10%, because maybe you don't have that much money.
Right.
Another option would be for client to ask to increase their limit, so this way
Mhm.
that percentage of balance versus limit is gonna naturally go down.
I
uh,
have a question for you.
mhm.
Okay, so I have a credit card that I haven't had a balance on in I don't know how long. And when I was going through, just to check, because I'm like, does this one have an annual fee? But right, every month I kind of go through and I check everything. And I saw that they lowered my credit limit from like 21.8 to 15.4. So I called them and they said they lowered the limit due to inactivity.
Mhm.
Would that show up? Now, I was able to, luckily, I caught them in time and I'm like, no, 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 I want you to please take it back up. And I thought I'll get gas on it, right, this month. But would that show negatively on a credit report that they lowered my limit?
Not really, because again, they score you based on your amount owned versus the limit. They
Right.
don't really score you if your limit is low. They don't
Okay.
they score you
But
on
maybe
that.
my
Yeah.
overall
So
debt.
do they do it like if you have 5 credit cards and your total credit limit's 100,000, and across those 5 credit cards you've used 25,000? Do they say, okay, it's a 25% utilization, or do they do the utilization for each credit card and then average that number? Because if it's a
Yeah,
broad number,
that's a
the
very good
rate goes
question.
down.
Exactly.
Yeah.
So they looked at each credit trading
Got
account.
it.
Okay.
Okay. Okay.
That's why, sometimes I have clients with 5 credit cards with small balances on them, and they, in preparation of getting, ready to buy, they think they need to clean everything up. They open new card, they move all the balances into one
Uh,
and close out those five, which, they had 5 years history on. So they actually
yeah.
shoot themselves 3 times in the
Yeah.
because they had 5 cards, which is good to have more than one, because it's harder to
Yeah.
keep up with five than one. So you get scored on if you have more trade lines and you are, organized enough to pay on time. And
Okay.
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 so that's one negative. Then the credit history gets wiped out, right? And the third
Yeah.
one is the debt utilization goes up. So they do look at each trade line separately.
Okay.
Gotcha.
Okay.
Okay. That's why you always talk to your lender before you do
Yes.
anything when you're looking for a mortgage.
Because it doesn't
Exactly.
all make obvious
Yeah, it's not
sense.
logical.
Yeah.
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 Okay.
Yeah.
Okay.
Don't
Thank
self
you.
diagnose and don't self-medicate yourself.
That's right.
Right.
That's right.
No Google MD.
Yeah. All right. So another one, the credit history, just like I mentioned in that little story or example, right? So you have longer your credit history, the better, of course. If you have a newer credit history and you're doing everything right, but your score is lower, just give it time because it's new. So you need to have some time for that start going. And then we have 10% effect on new credit. Actually, it would be a negative effect because in the beginning, when you open something new, it's an inquiry and it's something new debt until they see that you using it and you using it right conservatively, then it actually in the long run it's a plus. It's a good effect on your score.
Okay.
Gotcha.
10% also type of credit in use. They like to see variety. They like to see maybe revolving accounts like credit cards, installments like car loans, student loans, mortgages. So they like to see the healthy mix, so to say, right?
Okay.
So, and just to reiterate, the ways to improve the score: pay your bills on time, get current if you have past due amount, and stay current. Reduce balances on revolving credit cards to 6 to 10%. Um, and balances are determined by a statement, so you want to make sure you paying it before the statement comes out, before the due date, and you can check with your credit card when they report. Don't open new credit cards that are not needed. especially when we're talking about, like in preparation of getting the mortgage, right? So you don't want to open the card without talking to the consultant first. Increase your limit.
How long is it considered new, Tatiana? Is it like 3 months, 6 months, 12?
Typically it's 6 months.
Okay.
Yeah, so but in general, like even sometimes it's even 1 year, if you don't really need it, and but you have it, and then it's kind of um you know hurts your debt to income ratio.
Yeah.
Yeah. So
Okay.
increase your credit limit when it makes sense, just like I mentioned, right? Like if you cannot pay down, increase the limit, but don't increase the balance.
Yeah, yeah.
Right.
Keep the balance down. Don't close the used cards. Again, back to my story, right? Keep it
Yep.
open. Put it in the freezer if you're afraid you're gonna use it, but just keep it open. Dispute inaccuracy. I recommend people. A lot of people now check their, check their credit scores and kind of follow what's going on in their accounts. Everyone is entitled to one free credit report from each bureau. So I recommend to get reports from each bureau: Equifax, TransUnion, Experian. Why? From all of them, not just one, because not all creditors report to all three credit bureaus.
Mhm.
And if you just check in Equifax, for example, you might not know what's going on in TransUnion and Experian, because the creditor might not report to those, and maybe there are some fraudulent activities, and you don't even know that somebody opened the card under your name because they're not reporting to the bureau that you actually follow in. So to get the full picture, check the reports on all three bureaus, which you're entitled to.
Okay.
Gotcha.
And of course, use the credit, because cash isn't always king. And
That's
I
right.
know there are people that don't like using credit cards. And I get it. The thing is that this is the way, when you want to get a mortgage, when you want to get a loan, this is the only way for bank to analyze and see if you're credit worthy, right? And this is the only way to do it. So use it very conservatively. Don't overspend, and just use it a little bit, but don't go fill up your car and 5 minutes later pay it off. That's not gonna do any good. Just wait for a billing cycle and then make it.
Okay.
Yeah. So
Okay.
that's
Awesome.
about it.
Okay, one quick question. The 6 to 10% on the balances, if you're an overachiever and you go down to 3%, that could potentially affect your score negatively. Is that what I'm understanding?
I mean, not necessarily. I would say
Okay.
it's safe to pay it off or pay it down to 6 to 10%. It's more like when someone, like my client, let's say they have lower credit score, and I what did I do? Hold on. Stop sharing. Let's say they have lower credit score, and I run simulator for them to tell them what they need to do to increase their score, right? And the simulator will tell me sometimes that they need to get it down to even $10.
Yeah.
Yeah.
And it's better than to zero. But that's
Okay.
only in case when we really need to improve the score fast and to a certain level. Then, they need to follow directions precisely. But in general, if it's really hard for you to know, do you need to be at zero or $10 or
Yeah.
$11? So if you pay it to zero, you pay it to zero. It's still
Yeah.
gonna
Okay.
be better
Some
than
backdoor
keeping.
algorithm.
Yeah, it's different
Yeah.
algorithms. It's still
Okay.
better than keeping balances over 10%.
Okay.
Okay.
Good.
Awesome. Thank you. That's very helpful.
Yeah. Very good.
You're
Okay.
welcome.
If somebody needs to get in touch with you, how do they find you?
They can call me at 571-245-3000.
All
That's
right.
right. For the
All right.
best loan officer around.
That's right. All right. We'll see you next week.
Bye.
See you guys.